Hi friends, today's first business standard editorial is titled Testing Times for Edtech. It is discussing about how the Edtech fell from being an investor favorite during the pandemic to a non-relevant sector in the current scenario. So why this news came up? Because we have heard about the UpGrad-Unacademy deal. So ever since children started going back to school after lockdown, the edtech sector has been struggling, and the recent offer of upskilling firm UpGrad to buy the edtech platform Unacademy in an all-stock deal has raised some hope for the sector. The crisis for the whole sector started in 2022 as a result of just one company's downfall, Byju's, due to its corporate governance and irregular practices. What is the deal? UpGrad is buying Unacademy. So what is in the deal? To give you a brief intro, UpGrad was founded in 2015 and it offers industry relevant online programs of PG diplomas, masters, doctorate degrees. Unacademy, on the other hand, was founded in 2015 itself and offers online coaching for competitive exams like UPSC, IIT, NEET, etc. It is the second offer from UpGrad to Unacademy. The first offer fell through in January due to disagreement over valuation. Now, what is the valuation? UpGrad offered an all-stock valuation of 300 million. Unacademy was seeking, on the other hand, a massive 2.25 billion valuation. Its peak valuation was 3.4 billion in 2021. Now, what is the struggle of edtech sector? Even though the UpGrad Unacademy deal offers some hope, the edtech sector is struggling overall. The sector lost its relevance once pandemic was over and students started to go back to school. The difference between the valuation asked and the valuation offered, as we just saw in the UpGrad Unacademy deal, it provides a snapshot of the struggle. Even the most celebrated physics wala, the first edtech company to list in the stock market, saw its share price fall from 145 at listing day to nearly 80 rupees as of yesterday stock market closing. That is a massive 45% drop. Let's look at the numbers and values of the edtech funding deals that happened over the years. Just last year in 2025, there were 31 funding deals in the edtech sector, and the total amounted to $240 million. That translates to $7.74 million per deal. Now, when compared to 2021, the boom year of EdTech, there were 172 funding deals and it was worth a whopping $4.78 billion. That translates to 27.79 million per deal. Now, if you look closely, you could see how the number of funding deals, the valuation of the funding deal, and the funding per deal has reduced gradually over the years. The EdTech crisis showcases the poor strategic thinking by entrepreneurs and private equity venture capital investors. They were involved in a game of valuations and failed to think for the long term. Now, how did the downfall unravel? The EdTech sector knew that they lost their relevance post-pandemic. In a panic mode, firms like Byju's and Unacademy burned cash while attempting a hybrid online-offline model, acquiring startups and expanding unsustainably. This impacted their quality. Profits fell, layoffs happened, restructuring was done. Restructuring means closing unprofitable divisions and selling assets just to increase the cash flow. Investors obviously lost interest and went after other sectors. But not everything is bad. Even after pandemic, the investors and owners realized that upskilling, higher education and professional learning still had demand in online mode. With the advent of AI in the K-12 segment, if personalized education can be offered to school students, then that too could emerge as a key differentiator. In summary, we cannot remove online education from the picture. They are still needed and have relevance, especially when India has the world's largest youth population. Thank you.